These are the benefits of electronic trading system. Means doing for the participants who are doing trading on stock exchange via online, right? So the first benefit is it increases the efficiency of operations, right? If we are doing any trading online, it increases the efficiency of the operations, as the cost of operation plus the risk of error, they are reduced as compared to the physical trading. Fine. So trading, while these two risks, they are, the cost of operation and risk of error, they are reduced. They are reduced because of the instant trading, because instant trading takes place. Fine. Second one is the transparency. In the online trading, there is a transparency. Why transparency is there? That the participants or the buyers and sellers, they both can see the price of the securities, right, at the computer network, at the computer screen, as the computer network, as the computers, they are connected to the centralized computer network base of NSCI and OTCI, right? So all the informations related to the prices of various securities, they are available on their computer screen. Fine. So that's why the investors, they get a very fair deal, and the transparency before investing in any security at the stock exchange. Fine. And one more thing is there, that all the informations, before investing in any security, all the informations which are required by the investors, or after making any once they have purchased any security, after that how their share is, is it going up or is it going down. So all the information related to the shares, the securities before investment or after investment, they are available, or they are flashing on their computer screen, because the computers, they are connected to the centralized computer network of the stock exchanges, that is the NSCI and OTCI, right? The fourth one is it improves liquidity, right? Online trading system, it improves liquidity. Liquidity means converting the securities into cash. Fine. So securities are converted into cash in no time, or very easily. Fine. And through the nationalized or the centralized stock exchanges, or the trading system, large number of buyers and sellers, they can participate in trading. Right. The fifth benefit of online trading, electronic trading system or online trading system, is a single trading platform. Right. The trading is centralized. You just need to find a broker. You have to open a demat account, and you can do the trading by sitting at your home. Fine. So computerized online trading system is there, wherein this online trading system or online or electronic trading system has made the trading of securities. It has made the trading of securities easy. You can trade the security, you can buy and purchase security, you don't have to go anywhere, you just have to go open a demat account, you have to find a broker, and you do trading by sitting at your home. Fine. So that's why it has made the trading easier. These are the various benefits of electronic trading system. The next topic is trading procedure on stock exchange. How do we trade on stock exchange? So these are the various steps which would be telling you about how do we operate, how do we do trading on stock exchange. Before starting with the steps of the trading on the stock exchange, first we have to understand these 2 points, the two terms, which are dematerialization and the depository. What dematerialization is? Dematerialization is, it is holding the securities in the electronic form. When we are holding securities in an electronic form, or we are doing trading online, that is called dematerialization. Dematerialization is just like a bank account. It is just like a bank account. Likewise, we have an account in the bank, that is called the bank account. Fine. If we are having any account in an electronic form, right, that is called the demat account. We have a bank, we do cash transactions in a bank. The cash is transferred from one bank to another bank. If we deposit some cash in the bank, then our account is get credited. If we withdraw some amount from the bank, our account get debited, right? Likewise, in demat account, if demat account, generally they deal with the transactions related to the securities. The buying and selling of securities is done through the demat account, right? If we are selling shares, right, if our shares are being sold from our account, then our account will get debited. And if we have purchased, if we have bought some shares, then our demat account would be credited. Fine. So it works like a bank account. And if our shares, right, our shares are if we are selling or buying shares, if our account is getting debited or credited, that is done through a delivery slip. A delivery slip is issued, and this particular document, delivery slip, is just like a check. It's just like a check, and that should be signed by the demat account holder. So dematerialization is nothing but to holding securities, holding securities in electronic form, like we hold cash, right? Fine. Similarly, we hold securities in an electronic form, that is called the dematerialization. Fine. Second is depository. What depository is? Depository is an organization which holds shares in a demat form, or electronic form. Means holding securities is called dematerialization. Holding securities in a electronic form, that is called dematerialization. But the organization which is holding securities in electronic form, that organization is called depository. Fine. But similarly, it is quite similar to a bank. As I told you, it is quite similar to a bank. Depository is similar to a bank. Bank holds cash. Likewise, depository holds securities in electronic form. Okay. And depository holds securities in electronic form on behalf of the investors. And investors can anytime withdraw securities from a depository. As we withdraw cash, when we require cash, we withdraw cash from our account, from our bank account. Similarly, an investor can withdraw securities from the depository. Okay, so depository and a bank, their function are quite similar. Fine. Bank deals with the cash, whereas depository, it deals with the securities in an electronic form. Okay. There are two main depositories. One is NSDL and the second one is the CSDL. NSDL is the National Securities Depository Limited and CSDL is Central Depository Services Limited. These two depositories, they operate through the intermediaries, or we call them as depository participants or the contact point, right? Depository participants are the link. They basically bring together the depository and the investors. So these intermediaries or the depository participants, they are different banks or non-financial institutions. What do they do? These intermediaries, they open and facilitate trading and charge for opening demat account. Means these depository participants, they get the demat account open for the investors. Fine. And they charge some fees for opening these demat accounts or providing facilities to the investors. Okay, so I hope that these two important terms, they are quite clear to you. and they are important for understanding the steps which are required for the steps which are there for the trading on the stock exchange. The first step is the selection of a broker. Selection of a broker, before doing any trading on a stock exchange, an investor has to select a broker. For buying and selling of securities, for this purpose, a person has to that buying and selling is always done with the help of a broker. Fine. So as an investor, you have to find a broker, and those brokers who are there on the stock exchanges, they are SEBI approved and registered. They are SEBI approved and registered, and brokers, they buy and sell securities on behalf of the investors. So after selecting a broker who is SEBI approved and registered, now you will open a demat account with the depository participants. Now, who are the depository participants? Different banks and non-financial institutions, they are the depository participants. We have just discussed about that. What demat account is? Demat account, they are opened with the depository participants, and these accounts, they are necessary to trade in a listed securities online. If you don't have any demat account, you will not be able to do the trading or buying and selling of securities online. So we discussed depository, they hold securities, and depository participants, they open demat account, right, of the investors. So you will see that these depository participants, they interact, they provide a link between the depository and the investors. Fine. So depository and investors, they don't interact directly, but they interact with the help of these depository participants, and for this purpose, depository participants, they charge some amount or some fees from the investors. Fine. Third point, after opening a demat account, an investor has to place the order. Order for buying and selling of securities, right? So once demat account is opened, then investor will place the order to the broker, clearly specifying the price range and security code. Price range and the security code for the respective sale and purchase of securities. Fine. After placing the order conveniently, now comes the role of a broker. As per the instructions given by the investor, the broker will execute the order. He will finally place the order, and he will prepare a contract note. Now, what a contract note is? Contract note states the name and price of the security, parties involved, who are the different investors who are involved in the trading, means who are buying the shares or security, or who are selling the securities. So the name of the parties involved, and the brokerage and other taxes charged by the broker. So these things will be involved in the contract note. Fifth is, once the order has been executed, now comes the settlement. How the trading or transaction is being settled. Settlement means actual delivery of securities. For example, if I am buying the security and the other investor is selling the security, then once the securities are being delivered in my demat account, right, that is called the settlement. For example, if you need cash, right, and your account is, your friend has given you some cash via bank, he has deposited cash in your bank account, right? So if that amount of cash is being credited in your account, that is called the settlement in the language of trading, right? The language of trading, that your demat account is credited by the amount of securities. Okay, so that is credited to your demat account. There are two types of settlement. One is on the spot and the second one is a forward. Now what on the spot settlement is? On the spot settlement means settlement is done immediately. When we are doing the buying and selling, then and there only the settlement is done, right? And this settlement, it follows T+2 rolling settlement. T+2 rolling settlement, which indicates that, which means that any trade which is done on Tuesday, right, for that transaction, that settlement will, for that the settlement will be done by Thursday. If we are doing any transaction on Tuesday, for that our demat account will be settled by Thursday. So this is called on the spot settlement. Second one is the forward. Forward means that the settlement taking place after some time or any other date. Means the settlement for the transactions, they are not done on the spot, but they are done after some time or on any other date. And it, for example, T+5, T+7 means the date is not specified, means the date is not supposed to, the settlement is not supposed to be done within the given period of time, right? So that is, so this is called the settlement. So the process goes like this. First we select an investor, select a broker, then he opens a demat account, then he places the order, then the order is finally been executed by the broker, and once the order has been executed, then the settlement is done, whether on the spot or by the forward method.